What is going on, everybody? I'm your host, the Financial Conspirator, your guide to everything financials and conspiracies. Today is March 17th. Bitcoin is trading around 73,000. Let's get into this video here. I saw on Market Mondays, Earn Your Leisure. We're going to just watch it one time, and then I'll go through and pause and break down each and every clip. Let's get right to it.
Is MicroStrategy just over forever? Or, well, because, I mean, if Bitcoin goes back up, then you could see a rise in MicroStrategy stock. Or is their business model just broken? And even if Bitcoin continues to go up, MicroStrategy stock is never going to be what it once was.
I keep saying it. There's two things that you have to worry about. And this is part of the conversation that we had with Kathy at InvestFest. Going back to that, like, I'll push back on the program because of who came up with the commentary. But you're right. Michael Saylor is anti the establishment, and so is Kathy Wood. There's a competitive threat that comes with that. But to the business model is broken. I've been saying if they come out with a hit product with the Bitcoin strategy, they'll be okay. But just to solely say, hey, invest in me, and I could be a proxy to the investment, that's never worked out. Josh Brown came on and said it. Like, if you look historically, how many times this has been done, 98% of the time it doesn't work long term because it ends up being a margin call issue, or you have a congressman who doesn't like them and they come after you. So can they rebound? Yes, but I think he should go to chairman, find a new CEO, integrated product, and then I think from there they'll be okay. If you love MicroStrategy and that's your white Jesus, don't message me.
Your white Jesus.
If that's the father you pray to,
man.
Don't message me. You know what's funny to me? Shout out to my guy Kurt. Yo, when I start seeing Michael Saylor put up the Titanic in the background of his AI pictures, that was a signal that shit was about to go awry. At least he let you know. When it got to that 5 something, and he had the red eyes with the Titanic floating, and he had the little sailboat next to him, I said, oh, he knows some coming. They don't even let him in on all the crypto conversations. So is he more astute about crypto? Yes. But the issue is when you have people in power who see your model working and they take it from you, that's not going to fare well for your business long term. So I hope he's able to recover. I think he's an amazing person and a great investor and all the things. But
All the things.
he's not the white Jesus. So
You got 4?
One, because that was the one that I think was really harmful.
overhyped, yeah.
That was really harmful to a lot of people's portfolio, especially crypto enthusiasts, because that was a way to get, how it was pitched was, you get over leveraged returns, which I guess it essentially
It worked.
fulfilled that prophecy, because you get over leveraged returns on the downside, and
True.
it definitely did that as well. But I think a lot of people looked at MicroStrategy as a way, because if you missed out on Bitcoin when it was $5,000 or $10,000, and it's like, okay, even if it goes from 100 to 200, then people wanted that 500% return. And MicroStrategy, I mean, it kind of gave them that sense that you could still get oversized gains without even doing the options, just the regular stock.
Yeah.
Tracking Bitcoin,
Moving.
dollar for dollar as far as the track. And unlike iBit, which just tracks the performance, this was actually modeled after the performance of Bitcoin, but with more leverage. So you're already taking a very volatile asset and adding more volatility on top of it. And, for the Bitcoin maxis, it was like the best thing ever, because why would you not want to get maximum gain on something that you believe is only going to continue to go up over the course of time? But, when you start adding in the prices that he brought it at, and then not having any real other revenue come in besides Bitcoin, and, idea is a very good idea, but when put to test, it didn't pass the stress test. But it's not over yet.
It's not
over.
Yeah, this was that. What you just spoke of was my hesitancy into investing in it. It was like what happens when the leverage goes negative? How long can you stay in a positive position with the equity price if the asset starts turning negative and it starts to consolidate, right? If you're buying, it's not like you're buying when it hits lows. You're buying really no rhyme or reason, right? You're buying whenever you feel like, yo, it's time to buy.
I know another guy who did that, who's in the hills of Nova Scotia right now. When you buy, doesn't matter. Just buy it anytime. Anytime someone tells you that, absolute bullshit.
Yeah, the average price. What is the average price now? 97,000.
No, I think Michael Saylor's 76,868.
70 something.
70. Okay, so we're still sitting below the average price that he bought it at.
Yeah. So, but if you can pray directly to God, why you need an intermediary? God is amazing.
God is the greatest.
Right, so let's go back and let's dissect this bit by bit, shall we?
Michael Saylor is anti the establishment, and so is Kathy Wood. There's a competitive threat that comes with that.
Wrong. I strongly disagree. And let me have Saylor explain to you why. It's less of a competition, more of a framework, foundation laying, groundwork type of thing happening here.
Saylor have been visiting these big banks, right? We keep seeing these tweets, guess the bank. Some of them we can guess pretty easily. What exactly are you doing there? What are the conversations like? And does it have anything to do with what Michael recently said on stage in the Middle East, which is about digital money?
Yeah, there are multiple. If you start with, they're all trying to catch up with just the base of custodying Bitcoin and providing exchange services for Bitcoin. They've seen, for an example, Coinbase or Fidelity and what they're doing, and they want to be able to offer their customers native services with Bitcoin so they don't take the money off platform out to somewhere else. So I'll just start that as a baseline. I'll call it a checkings account and a savings account for Bitcoin. Right. And then on top of that, what do they want to do? Then they want to offer things like Bitcoin lending, which means you get loans against Bitcoin. And we know a lot of folks are doing that on a one-to-one private loan basis, but they should provide it in general. Perhaps offering instruments that give you yield off of Bitcoin. That would be the next sort of step above that. And then a set of Bitcoin-backed products, not too much different than what we do. An investment bank would want to be able to underwrite Bitcoin-backed securities like MSTR or like any of our preferreds. That would be a next step. And then you get into offering digital credit, right, which would be our preferreds or a bank preferred based off of Bitcoin. And then the last thing, which is what Mike talked about at Bitcoin Mina in the Middle East, which is digital money, right? How do you give somebody essentially access to something that looks like money backed by Bitcoin that gives them a steady yield that's better than what they would get otherwise, called 8-9%. So the entire stack of services, and then you get into things like tokenization and stable coins, and you move on and on. I think the largest banks in the world and the largest banks in the US are going to offer that entire stack of services in the next 2 to 3 years.
CoinStore.
So we're not seeing a competition dog-eat-dog world out here.
I meet with all these
To
banks.
believe.
I went and met with the CEO of Bank of America. I've been a client of Bank of America for 30 years, and I pointed out that, this is a great opportunity for the bank, and they were missing it by, having a very, very vague, ambiguous, anti-crypto policy, and maybe he should intervene, and he did.
Right.
But to the business model is broken. I've been saying,
Generally, nothing changes. The business model stays exactly the same. The unique thing is that when Bitcoin crashed 4 years ago from $69,000 to $16,000, a 70%, 80% crash, we did not have STRC then. And we did not have a way of raising capital in a large manner during a Bitcoin bear market, because we were primarily using MSTR and other forms of leverage that are convertible debt primarily that's related to the MSTR price sentiment. So although the price is low, we didn't have access to a lot of capital. Now the unique thing is STRC exists. It's accessing or tapping a very unique differentiated pool of capital. That's, the risk averse fixed income capital that we are now able to tap very successfully and in a very large manner in the Bitcoin bear market. And I think it will only go up from here as we go into a bull market again and sentiment changes to the upside and new demand comes in for Bitcoin and Bitcoin related stocks. STRC will become even more attractive then, or even more, just larger then. A lot of more people will know about STRC then. So that's the unique thing over here right now.
If they come out with a hit product with the Bitcoin strategy, they'll be okay. But
Right, so that hit product is digital credit. And it's going to take a while for the market to digest this. It's going to take a while for retail to even understand or learn what this is, as you can see, right? They don't even know that MSTR has several products. They don't just have one. They have STRK, STRD, STRF, STRC, STRE, and more products worldwide. There will be another STRC for Canada, a STRC for Europe, and eventually an STRC for Asia. But right now, retail doesn't even know the strategy is creating products beyond their Bitcoin holdings.
just to solely say, hey, invest in me, and I could be a proxy to the investment, that's never worked out. Josh Brown came on and said it. Like, if you look historically, how many times this has been done, 98% of the time it doesn't work long term because there ends up being a margin call issue, or you have a congressman who doesn't like them and they come after you. So can they rebound? Yes.
So what they're referencing there is Josh Brown was on an episode of this same show, Market Mondays, by Earn Your Leisure, and he mentioned that he doesn't understand why MSTR trades at a premium. He says that 98% of companies before this that have tried to do this failed. Well, none of them have tried to do it on Bitcoin. Bitcoin is the only truly scarce asset in the world, and MSTR is the largest Bitcoin treasury and the first Bitcoin treasury. So they're not like, you can't just compare them to a gold treasury company or a silver treasury company. Gold and silver, you can find more of it if the price goes up enough. People will melt their gold and their silver, and there will be more on the market. Bitcoin is a scarce asset, truly scarce for eternity. So let's go back and listen just a bit more.
Like them and they come after you. So can they rebound? Yes. But I think he should go to chairman, find a new CEO, integrated product, and then I think from there they'll be okay. If you
Again, integrate a product. Integrate a product. Let me introduce you to a product. It is called digital credit in the form of Stretch.
This is Stretch versus every other credit instrument in the United States on average. What you can see is Stretch is offering 16.5% tax equivalent yield. The hottest thing in traditional credit is private credit. It's 7.6%. Investment grade bonds 4.7, money markets 4.1, commercial paper 3.9, your bank account 40 basis points. So what you can see is Stretch is offering more than double, anything in the traditional credit market, but it looks sort of like 4 times better in the US. Let's think about all the digital credit instruments. What you see here is that digital credit is simply superior to conventional credit. Like the worst instrument or the lowest yielding instrument we have, STRF, Strife, has got a tax equivalent yield of 14.4. It's double the best thing in the traditional credit market. Stretch is quadruple. Stride is 5 times, what you'll get from a money market. And Strike is even higher after you adjust for the equity component. So you can see these numbers are off the charts, and it's going to take a while for credit investors and for the market in general to adjust and digest this. But we believe that digital credit is the killer app of digital capital. And we believe that the most compelling business model is a digital treasury company built on digital capital.
They are far beyond just holding Bitcoin. They, in fact, do have a product, several products, digital credit. It is the most revolutionary product we've seen at this time. And I also heard mention of a margin call or a margin price. So let's just debunk that whole idea right now.
a lot of people don't really think. They're like, oh my God, MicroStrategy is going to get liquidated at Bitcoin. It's like, well, dude, no, Bitcoin could go to a dollar a Bitcoin. We're not getting liquidated. We're just going to buy all the Bitcoin if it goes to a dollar a Bitcoin. Then it's going to go back up again.
I'm a value investor. I look for asymmetry. And in my view, right now, MicroStrategy is the most asymmetric value investment in the world. And most people don't understand it. And it's kind of stunning to me. My partner, David Foley, and I, we did a model. We've done several models, and we've looked at it and said, if Bitcoin stays at $50,000 for 4 or 5 years, you can't break this company. It's unbreakable. I mean, the dilution, we calculate the dilution would maybe be 15 or 20%. So the downside case here, in our view, is really covered, as a result of the fact that the debt's unsecured and the interest rate on it is very, very low. Some of it's convertible, as we all know, and the preferred is really equity. So to me, you've got an unbelievable situation. I think a lot of people
don't understand what they're looking at here. There is no margin call. They already have an amazing product, digital credit. Let's continue.
Love MicroStrategy, and that's your white Jesus. Don't message me.
Your white Jesus.
If that's the father you pray to, idolater, don't message me. You know what's funny to me? Shut my guy Kurt. Yo, when I start seeing Michael Saylor put up the Titanic in the background of his AI pictures, that was a signal that shit was about to go awry. At least he let you know when it got to that 5 something, and he had the red eyes with the Titanic floating, and he had the little sailboat next to him. I said, oh, he knows some kind.
Right, so that picture was posted in November of 2025. The all-time high was in November of 2024. You're only a year late, but, that's funny. I get it.
They don't even let him in on all the crypto conversations. So is he more astute about crypto? Yes. But the issue is when you have people in power who see your model working and they take it from you, that's not going to fare well for your business long term. So I hope he's able to recover. I think he's an amazing person and a great investor and all the things.
I would argue strategy has one of the most difficult moats to replicate. I don't see any company purchasing 760,000 Bitcoin in one go. I don't see many that can afford to do that. And even if they did and could, that would only push the price higher, increasing strategy's value, allowing them to buy even more. So this flywheel here, it's not just some magic made up Ponzi scheme that's eventually going to blow up in a margin call. There is a real system, a very real flywheel going on here that would not break the company. There is no strategy is one of the most well protected moats. Digital credit, 3% of a truly scarce asset. There's only 21 million Bitcoin and they have 760,000. I don't know how banks can compete with that unless they start buying immediately and with scale. And again, that would only increase the value of MSTR. Do you see what I'm saying here, guys? Come on, let's continue.
But all the things.
He's not the white Jesus.
So you got 4?
One, because that was the one that I think was really harmful.
Overhyped, yeah.
That was really harmful to a lot of people's portfolio, especially crypto enthusiasts, because that was a way to get how it was pitched was, you get over leveraged returns, which I guess it essentially
it worked
that prophecy because you get over leveraged returns on the downside, and it definitely.
Yes, over leveraged returns on the downside and the upside. You need to keep in mind that Bitcoin is down from 125,000 to 73,000. What did you expect the Bitcoin leverage proxy to do? Skyrocket to new all-time highs. Okay, since it adopted Bitcoin August 10th in 2020, it has outperformed Bitcoin by around 2x. MSTR is up 1,100%, and Bitcoin is up 521%. Tesla's up 320%. Google is up 311%. So it's more than 4 times better. It's performed more than 4 times better than these other companies, besides NVIDIA performing better than the Mag 7, right? And despite this recent price drawdown where, shareholders got destroyed or whatever you claim, which fair if they haven't been buying the dip or they bought the exact high of 540, shareholders have still been receiving a Bitcoin yield. Their sats per share has been growing over time. The credit rating of MSTR has been increased. The credit profile and the credit rating of MSTR is only increasing with each purchase, each raise. So the company is only getting stronger with this bear market, and it's exciting to see. Let's continue.
Well, I mean, it's pretty important to note that we're not even 1.15 times levered. We're very fractionally levered, and our debt that we have is 4.5 years out. So we don't really have any trigger points anytime soon. And if Bitcoin were to fall 80%, we're still over collateralized and we're fine. So our balance sheet's pretty stable. The company's strategy, just like an intelligent bank, would be to build amplification for the common stock using preferred equity. So the equity never comes due. It's a dividend payment declared by the board. It's not a coupon. We can't be in a default. There is no credit default situation from the digital credit that we're selling at this point.
The moment, just because I think people want to understand.
Yeah.
What a leveraged bet this is, but you're suggesting that because it's preferred, it never comes due. How can it be that they never come due?
If you were using margin debt, you'd never want to go beyond 10% leverage. If you were using bonds, maybe 25% is about the most you would want to do. But if you're selling a perpetual instrument, I borrow $1 billion forever, and I agree to pay you, say, 10% dividend yield forever. The principal's never coming due. Right? And the preferred stock, by definition, is a dividend. It's not a coupon. The board has to have the option to suspend it in duress. So it's practically speaking possible to take your leverage beyond 20% to 30 or 40% even, but you don't have the kind of credit risk you have when you have a bond or a margin.
Let me ask you a different question.
Let's see. Let's continue.
Did that as well, but I think a lot of people looked at MicroStrategy as a way, because if you missed out on Bitcoin when it was $5,000 or $10,000, and it's like, okay, even if it goes from 100 to 200, then people wanted that 500% return. And MicroStrategy, I mean, it kind of gave them that sense that you could still get oversized gains without even doing the options, just the regular stock.
Yeah.
Tracking Bitcoin,
moving
dollar for dollar as far as the track. And unlike iBit, which just tracks the performance, this was actually modeled after the performance of Bitcoin, but with more leverage. So you're already taking a very volatile.
So what he's trying to explain here is that MSTR buys Bitcoin and they increase the Bitcoin per share. iBit only buys Bitcoin for their shareholders, as in if there's an influx of $1 million, they'll buy $1 million. If shareholders sell 400 million, then they have to sell 400 million worth of Bitcoin. MSTR is a Bitcoin treasury company, meaning they buy and they hold, they stack, right? They increase, they compound Bitcoin per share. So that's the difference between the two.
So asset and adding more volatility on top of it. And, for the Bitcoin maxis, it was like the best thing ever, because why would you not want to get maximum gain on something that you believe is only going to continue to go up over the course of time? But, when you start adding in the prices that he brought it at, and then not having any real other revenue come in besides Bitcoin, and idea is a very good idea, but when put to test, it didn't pass the stress test. But it's not over yet.
Again, we're only 11 months into launching the preferreds, right? Like these instruments haven't been out there for 5 years. So it's time to season the market in these instruments. Even the question you asked earlier, how do we pay for the dividends, right? There are a lot of folks out there who don't believe that even though we have, $65 billion worth of Bitcoin, that we can pay $800 million a year worth of dividends.
Yeah.
Right. And so the more we pay the dividends out of all of our instruments every quarter, that's seasoning the market to realize that even in a bear market, we're going to pay these dividends. When we do that, they start to price up. We can then use the ATM to raise more money. But it took us to go through a bear market where they're common. And when we came out the end of that bear market in 2023, people are like, oh, here's a company that can withstand the bear market with just a levered Bitcoin strategy. Now we can prove that we can withstand a bear market in this case, and it hardens the company.
Yeah,
right?
I think that makes total sense to me, because like you say, last time Bitcoin went through a bear market, the question was like, is there a point where strategy gets liquidated and you have to start selling Bitcoin? And once that didn't happen, everyone gained confidence in it. And maybe it does take something similar in these preferreds before people have full confidence in them and willing to put more and more money into that.
Yeah, you remember a lot of our investors today didn't even know what strategy was. Well, MicroStrategy at that point in time in 2022. Right. And you remember the narrative back then. What was going to happen to the company? Is there going to be a margin loan?
Strange.
Yeah, our stock went all the way back down to where it started. It was at about $16, and we were trading, I think it was 0.8 MNAV, and everyone was just ready for the company to implode. And we didn't do that at all. We hardened, we got stronger. Right. The test of the test of our management skills, but the test of an individual, the test of a good team. I don't know cricket, but I'm guessing, the teams are tested when they're not doing well. Right. Like no team wins all the time. Right. And so we were tested at that point in time. And I think we did pretty well.
Let me just pause here. He's absolutely correct. People didn't even know back then, but what they don't know now is that they've issued digital credit, 11.5% interest, tax-free via Stretch. And they can use Stretch to issue shares to buy more Bitcoin. And this doesn't dilute the shareholders at all. People don't even know these things exist right now. And this is a bear market, and they're able to buy $1.5 billion worth of Bitcoin during a bear market. I would not call that a failure.
Like no team wins all the time. Right. And so we were tested at that point in time. And I think we did pretty well in 2022. If this is the beginning of a bear market in 2025, we have another test. Are we going to pay our dividends or not? And I sit here and say, we're going to pay the dividends. And when people see that, we're going to pass the test, and we're going to come out of this, and the next bull market will shoot back up again. Right. Because people understand that we know how to run a Bitcoin treasury company and a Bitcoin credit company.
Yeah.
And that's exactly what they've done. They've continued to meet obligations. The Bitcoin yield is at 3.7% year to date. So Stretch is working. The dividend payments are working. There's confidence in their ability to pay the dividends, to continue to pay the dividends, despite Bitcoin being down, despite all this volatility. They're still here. I wouldn't call it a failure at all. I know it's not over, but it's definitely not a failure. They've issued $5 billion. $5 billion. Or STRC is now worth $5 billion. They've been able to issue billions in this preferred. This is the best performing preferred market, best performing preferred instrument we've ever seen. And again, the volatility is not a bug, it's a feature.
You don't want it to be non-volatile. Here's what you want. You want it to be extremely volatile, because that way you know something nobody else knows. I give you 21 years and you can go start a company, borrow money, raise capital, start a hedge fund, create a Bitcoin business, tell your friends, start a podcast, build a life for yourself, get leverage, mortgage your house, change the view of your bank. I'm giving you the ability to do work. It's a lever. It's a 21-year lever, okay? Like MicroStrategy has been working 4 years. If Bitcoin had gone from 10,000 to 65,000 on August 11th, on the day we announced our Bitcoin buy on August 10th, we wouldn't be worth 40 billion right now. We would be worth 4 billion right now.
And the same goes for you or me. If MSTR hadn't have crashed from 540 to 130, I wouldn't have been able to collect the amount of shares I have now. It's all about where your time horizon is. I'm 10 plus years in the stock. I'm not worried about a price dip over the past year as Bitcoin has been dipping, which makes sense as a Bitcoin leverage company. Let's continue just a bit.
It's not over.
Yeah, this was that what you just spoke of was my hesitancy into investing in it. It was like, what happens when the leverage goes negative? How long can you stay in a positive position with the equity price if the asset starts turning negative? And it's
let's answer that question.
There are some percentage numbers that matter. BTC escape velocity.
That is the appreciation rate of Bitcoin that is necessary for our company to outperform Bitcoin. So if you think Bitcoin is going to appreciate faster than 10.3% a year, then all of our digital credit instruments are actually they're profitable to the shareholders to sell them. And this kind of makes sense because if Bitcoin appreciates 20 or 30% a year and you're paying dividends of 10% a year, you can see how there's an accretion to the common stock. The BTC cruise speed metric, that is the rate of Bitcoin appreciation necessary for us to create shareholder value continuously forever. We might not outperform Bitcoin, but the company will create more value for the shareholders even at a 1.4% appreciation rate. It's a really shockingly low number. And BTC stall speed, what does that mean? That means that for us to get to the base level where we're one-on-one collateralized, Bitcoin has to fall 19% per year, every year for the next decade. So if Bitcoin keeps falling 19% a year, year over year after year after year, in 10 years, we're just one-to-one collateralized. Of course, we'd have 10 years to figure out what to do. But when you look at those metrics and keep them in your mind, you realize that the company's a fairly robust digital credit vehicle. And
right, so to answer that question, how long can they stay afloat as price goes down and down and down? Bitcoin would have to go down for 19% for a decade. And that was according to the Q4 earnings call. Right now it is, as I said before, March 17th, 2026. The price, it would have to go down to 8,400 and stay there for 10 years for MSTR to be one-to-one collateralized with its debt.
And you look at this number on the top right-hand corner, BTC break-even ARR, 1.84%. What that means is as long as Bitcoin appreciates at 1.84% per year, we can pay these dividends forever. And the business never has to change anything. On $50 billion of Bitcoin growing at 1.8% per year, we can basically fund that $900 million of dividends per year forever. So
that's
nothing
crazy.
Yeah, the business doesn't break. The business doesn't break if Bitcoin is only appreciating at 5 or 10%. It can last literally forever.
This company is perfectly well capitalized for a downturn of 2 years, 4 years, 5 years, 6 years, 7 years, 10 years. They're perfectly fine. And let's close it out here before I finish
Starts to consolidate, right? If you're buying, it's not like you're buying when it hits lows. You're buying really no rhyme or reason, right? You're buying whenever you feel like, yo, it's time to buy.
I know another guy who did that, who's in the hills of Nova Scotia right now. When you buy, doesn't matter. Just buy it anytime. Anytime someone tells you that, absolute bullshit.
Yeah, the average price. What is the average price now? 97,000.
No, I think Michael Saylor's 76,868.
70 something.
70. Okay, so we're still sitting below the average price that he bought it at.
Yeah. So, but if you can pray directly to God, why you need an intermediary?
Whoa. If you could pray directly to God, why do you need an intermediary? If you could buy Bitcoin, why buy MSTR? Because if you buy Bitcoin once, you get that amount of Bitcoin once. If you buy MSTR, your Bitcoin per share increases with each capital raise. And MSTR can raise capital in ways that we cannot. I cannot issue digital credit, sell it to fixed income investors, pay them a yield, use the spread between Bitcoin appreciation and the yield to then give appreciation to the MSTR shareholders and continue to raise more funds. I can't do all that. That's not what I can't do all that. So that's why I would pray to this guy and not God directly, I guess.
God is amazing.
God is amazing. God is amazing. So let's continue to address the concerns about MSTR not having any revenue streams, or there's nothing for them to do if Bitcoin goes down. The video before I showed mentioned that MSTR didn't have Stretch before. Now during a bear market, they can raise funds via Stretch, Stride, Strike, Strife, Stream. But how important is that really? What does that actually mean? Let's have Saylor break it down.
What our company's doing is we have a lot of capital. We have about $70 to $75 billion worth of Bitcoin on any given day. We sell those credit instruments, and we have about $6 billion of those credit instruments outstanding. They're so way over collateralized. Then we generate various types of dividend streams or upside with them. As it turns out, we expect Bitcoin to appreciate 30% a year, but we don't pay more than 10% to 12% dividend streams. So our common stock shareholders get the excess. So what happens is we take that volatility and performance of Bitcoin and we strip the volatility, the risk, and the performance off, and we sell you 10%, 12%, 8% as a credit investor. And then the extra performance and volatility goes to the equity. So MSTR, which is our common stock, is more volatile, higher performance than Bitcoin. And what you have is some people want more Bitcoin performance and they want to be on a roller coaster and they buy the common stock. And some people want less and they just want the pure dividend stream. And of course, the people that just love Bitcoin and they don't want any counterparty risk, they don't want to own a security, they just buy the commodity Bitcoin. And so that's how we sit in this ecosystem.
Right.
Well, I think the money market industry is massive. There's $30 trillion worth of assets invested in treasury type instruments in the United States. Stretches about 1% of 1% of that industry. It's about a $3 billion issuance. And the big idea here is you take an asset appreciating 50% a year with a volatility in the mid-40s, and you strip the volatility from 45 down to below 5, maybe to 2, 3, or 4, or even 1. And then you extract about 10% dividend yield. And if you do that, you end up with something which is yielding 6% more than the risk-free rate. And when the vol gets to 1, you've got a Sharpe ratio of 6. So we're really engaging in financial engineering to distill pure currency yield above the risk-free rate. And of course, the common stock shareholders in MSTR get the difference between the 10% that we pay and the 50% that Bitcoin's been performing. Long term, the math is pretty simple. We expect Bitcoin to appreciate about 30% a year for the next 20 years. We expect to pay about 10% dividend yield on the preferreds. 2/3 of the benefit go to the common equity shareholders, and most of the volatility is stomached by the common equity shareholders and the corporation. And the credit investors get this pure 10% return of capital dividend. That means it's tax deferred. They don't have to pay tax on it until they sell the underlying instrument. And that means that they're able to invest in a credit instrument that pays them a 10% dividend instead of holding a money market that pays them 4% in a taxable coupon.
Michael, of course.
Let's round it out here, folks. MSTR is not in a competition. It's not going to be dethroned. They are partnering with banks, laying foundation, laying the groundwork. You guys see DJT, Donald Trump Media Company? They're buying Bitcoin, selling shares to buy Bitcoin. They're following the playbook. That is Signal, people. And they are growing revenue, quote unquote, / revenue, via preferreds. They are able to give revenue growth, Bitcoin yield to their shareholders via the preferreds and raising common stock at a premium. MSTR MNAV is currently trading at 1.19. It is advantageous for them to smash that ATM as they have been doing and using leverage strategically to focus on long-term Bitcoin accumulation. Man, we brought it in there. People, that's all I've got for you. Like the video, subscribe, send it to somebody who doesn't understand MSTR. And that's all I got, folks.